Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using fundamental analysis and provide advice that has really no strings attached to it. We just want to give you a good opinion about these companies that we're seeing quite prominently in the news. And this one had quite the fall the other day, reported some numbers. I'm talking about Weight Watchers, and the numbers were quite lacking, I'm going to say, which sent the stock much, much lower.
Yeah, and Chase, so we can probably come up with a lot of puns with this, like need to slim down your portfolio or lose some weight on your portfolio. A lot of things you can say about this one. What's really important is the numbers that come out, and I was surprised, but not that surprised after they sort of was, and it just because yes, the pandemic's over. People before they go back to the office, they want to slim down. Well, that wasn't quite the case because people could surprised us with they're not ready to slim down yet, are they?
I know it's interesting. I pulled up here some other numbers that kind of came out from the quarter, and subscriptions for Weight Watchers actually did fall 1.9%. There's still 4.9 million subscribers out there, though, and subscription and product sales fell 6.9%. So I'm not super familiar with Weight Watchers program there, but it sounds like, well, number one, they had less subscribers. And also, too, those people that are subscribed, well, now they're buying less product as well, which could be problematic. But the other thing that I thought was quite interesting,
Chase, can I stop you right there? I mean,
yeah,
does it show the data is that year over year or quarter over quarter? Does it show when that data was for?
it just says it is for the quarter ending July 3rd. So it doesn't tell me if it's compared to last year or compared to the last quarter. I'm going to venture to say it was compared to last year, but that is again speculation.
Yeah, because usually companies will compare year over year because a white quarter, a lot of things can happen in different quarters. So I'm assuming, as you are, it's year over year, but kind of nice. And I think when they don't say that, that's usually what it is, year over year. Very important numbers, though.
Yeah, and the other thing that I look at here that was interesting. I mean, there's other diet companies out here, and a gentleman from Lane Research, he actually pointed out that MetaFast, which is another diet company, they've actually had quite a strong year. So he's saying, well, I wonder if this is company specific, and if I own the stock, I would really want to know what are the dieting trends. Are people really holding back from dieting, or is this Weight Watchers specific here? And the other thing I look at too is, I mean, how many diet companies are out there? I mean, how many different diets have you seen? I remember it was paleo years ago, the Atkins diet, then it was keto and, Weight Watchers. I mean, there's so many different fads that come and go with dieting.
And don't forget about Nutrisystems. They were huge with, what was her name? Osman, Marie Osman, big promoter for that. And, if you do look at, we've not even looked at the numbers yet. So we're first time sharing with our audience these numbers together. If we do find something that looks pretty good, if I was going to invest in the company, I'd want to say, well, is this, again, company specific? Or maybe I should look at Nutrisystems and the other public companies to see what's going on with them as well. Just doing your homework and your research before you invest in any company.
Yeah, absolutely. I mean, because sometimes you can go into what's known as a value trap where it's got great valuation, but the business is a trap because, well, it's really going nowhere over the next
That's right.
decade, let's say. With that said, I guess let's get into the numbers here. And the other thing I wanted to point out with Weight Watchers before we look at that is they were down 25% or more than 25% after the reported numbers. So I'm guessing the valuation should look pretty strong here.
And then we should see, and I think in the second half, when you kind of go your part, we'll see the stock price. So I'm kind of curious on that because I know that, what is her name? Oprah Winfrey.
Oprah Winfrey, yeah.
Oprah Winfrey, right? Thank you. That the stock was $10 a share. She got into it. I think it went up to 40. So I'm very curious to see what it is now. But let's look at some numbers to see if this company is worth looking a little bit more at. These numbers are for the period ending. They just reported July 3rd, 2021, last financial information. Not a great start here. And the PE ratio now 29.2. That is below the industry at 33.9. But at 29.2, I was wondering what it was, 2 weeks ago. We do see price to sales looks okay at 1.3 versus 2.68. So that's half the industry. Actually, it's pretty good. What I don't like seeing here is price to tangible book value, not material for the company or the industry. And that just always worries me because if you take away all the intangible assets, there's really no value to the company. What if those intangible assets are written down? Could really change things dramatically. So I wish where they had some. Price to tangible book value showed me that they had some value there. We do see price to cash flow. Well, that checks in at 15.3. That is better than the industry at 17.2. Now, they do not pay a dividend. We do see their sales year over year for the last 12 months are down 9% versus the industry growth of 11.9. So this could be company specific to Weight Watchers. Perhaps some other companies haven't reported yet on the industry, but it does worry me seeing a decline on sales for Weight Watchers and not the industry. And the same holds true for the earnings. Earnings year over year for the last 12 months, wow, down 32%. Industry saw an increase of 65.97. So not looking good for Weight Watchers so far. Look at the balance sheet. We do see a current ratio of 1.05. That's pretty good. The industry is at 1.38. Now, we don't see any total debt to equity, and that's not a good thing. The reason we're not seeing a number there, because remember, you have no equity. So if you're going to invest in this company, you need to go to the balance sheet and look to see how much debt they're actually carrying because they have zero equity. It is a high debt industry, though. Gosh, the industry is 236. We get a little bit uneasy around 130, 140. No return on equity, because again, no equity. Industry does have return on equity of 31.6. Net profit margin, well, that checks in at 4.5, and that is below the industry at 7.9. Again, kind of leaning towards the side. This could be company specific here. Look at the receivable turnover, very important that you're turning your receivables over. Very good, 36.4 versus 17.4. And inventory turnover, 16.6 versus 9.6. And these are turnover rates. You do want those numbers higher. That's a positive. Let's take a look at the earnings going forward. I'm very curious here, Chase.
And it is interesting. I mean, I, it's not like this company should be super asset light. You wouldn't think. So I would definitely want to understand that balance sheet more and why that's occurring. And I wonder too on the sales growth versus the earning, or sorry, the sales decline versus the earnings decline. I mean, they must have been spending a lot on marketing or something to have that large discrepancy between the sales decline and the earnings decline there.
Yeah.
Definitely want to understand that story as well. Let's take a look at these number here. You can see the current price for Weight Watchers. I guess it's WW now. WW International is $23.93. You can see this massive decline here, as it did have a 52-week high of $41.13, and the 52-week low, that's $17.75. If I go out to December 2022, I see estimated earnings per share of $2.17. That would use a pretty attractive target sell price of $36.02. I mean, that's quite strong. I see the discrepancy here between the earnings actually wasn't as large as I thought it was going to be. You see the highs 265, the lows $1.90. I mean, it's a decent size range, but not anything astronomical. Especially you bake that into 11 analysts. I mean, that's a pretty sound number if I'm looking at this data here. So I think the target sell price looks good, but I have a hard time getting over that weak balance sheet.
One thing I want to look to at Chase, if I was going to invest in this company, the trend of those earnings estimates going forward. I'm just curious how much they've dropped. Did they drop enough? Could they drop in the future? So you might want to hold off on this. But I'm just, I would say it might be worth a little more research for investors because you could get a good opportunity here. And I really don't understand how Weight Watchers work. I mean, I know they used to have meetings and stuff. Very important if you're going to understand this. Maybe you're like me, maybe 20, 25 pounds overweight, need to lose some weight. Maybe you should join Weight Watchers to see how it works. That's doing your research on the company. And maybe I'm only 15 pounds overweight, not 25.
Yeah, I don't know. There's just so many different options to lose weight nowadays, was my thing. But I do think, I mean, you got all these events, you got all these weddings pushed back. I mean, people generally want to be in great shape for their wedding. So, I mean, it still could be a fad as we get back to normalcy here. Or you haven't seen people in, several months, a year now. It's like, well, gosh, I don't want to see him for the first time and be overweight. So, I mean, there could be that kind of psychological lingering occurring. So we'll have to see what happens. I mean, it all comes down to the numbers for us at the end of the day, though. And I'm pretty iffy on it, I guess, at this point.
Yeah, one thing I want to know too, Chase, and I'm going to say this, I could be wrong on this, but Oprah Winfrey, I don't think she has the pull she used to have. But I think if she still holds it, you could see her coming back in and maybe doing some advertising for them to kind of turn things around. But I'm not sure if she still has the big position she had. Yeah, she really, you don't think so?
I don't think, I mean, she used to be huge. I mean, not like that,
Be
but like
careful.
a big time like advocate. Like people knew who she was.
Yep.
And I just think that she's not as prominent nowadays, and I could be mistaken, but I mean, you just don't hear about her as frequently.
Well, she's not on TV every day. She was on TV every day, I think 3 o'clock weekdays for years. And then she went off to her own thing. And, I mean, I think she's a billionaire. So I think she probably just like, okay, I'm done with it. But yeah, she's not as prominent as she used to be. But I think she still comes back, still has followers. But I'd want to know that too if I was going to invest in the company, because that could be a somewhat of a game changer.
Or also, I saw her. She's a brand or a spokesperson. I forget her exact title with the company. It's through 2025. I do wonder as well if what if all of a sudden she starts selling shares. I would want to know how much of the company she owns, because if she sells off a lot of shares, that's going to really take down the stock price as well.
Yep.
So just some things to consider. So we thank you for joining us today for our smart investing weekly stock analysis. If you enjoyed the video, be sure to hit that subscribe button below for future videos. Again, we try and do these on a weekly basis to keep you educated. Other thing too is, this should not be used as investment advice. It is for informational purposes. If you are interested in learning more about our investment philosophy, our investment firm, Wilsey Asset Management here, please visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com.